To make the most of your stock investment, you must understand the ins and outs of the stock market, including knowing the best season to sell stock. The stock market is dynamic. It changes at different times of the day, week, and month. And this makes investors often wonder when it's best to sell. Welcome to Money and Investment, where your financial future starts today. Ever wondered why starting to invest when you're young is a game changer? Let's dive in. Investing in the stock market might seem daunting, but it's a powerful tool for building wealth. Why? It's all about time and compound interest. Starting young means more time for your investments to grow. Think of it like planting a tree. The earlier you plant, the longer it grows and the bigger it gets. Worried about risks? The earlier you start, the more time you have to recover and learn from market ups and downs. And if you're starting at 50, no worries. It's about choosing the right strategies suited to your stage in life. Trying to figure out the best season to sell a stock can be challenging because this will determine whether or not your investment will yield a good return. Profits and losses are usually incurred at this stage. Some people say downtime or uptime is the best time to sell. I do not entirely agree with them. There is more to just the timing. Every good investor should consider certain factors before jumping right into sales, regardless of what time and season it is for the stock market. Only after everything required has been considered and your boxes have been ticked can you go ahead with the sale. In this video, I will detail some of these factors that should be considered before you're ready to sell stock. Number 1. When a good opportunity sets in. The stock market is full of uncertainties. You never know what will happen the next minute. So every good investor must be ready and willing to jump on opportunities when they come. I do not consider any time of the day the best time. You cannot possibly be waiting for a particular time because you think it is best to sell then. What if you get a reasonable bid? What if a good opportunity is before you? Dear investors, whenever a suitable opportunity sets in, it is a great time to sell. Number 2, when there's a sign of bankruptcy. I advise investors to know the ins and outs of the company they are stocking with. If you properly understand how the company operates and performs, you will know when they are headed towards bankruptcy. And this is a signal to sell off your stock quickly. Do you know why? When companies go bankrupt, shareholders stop getting dividends because the companies are only obligated to pay when they are making profits. And depending on the level of bankruptcy and whether or not the company will come out strong, shareholders may lose everything. Hence, selling stocks off quickly when there's a signal of such is the best option for investors. Number 3, when you are in need. This may not sound so amazing, but it is what it is. The sole purpose of investing is to have more money for the future. And what if that future is now? Do not beat yourself over selling stocks when you need the money to sort out pressing needs because you think it is too sudden and should be saved for a later day. Do you have an investment that can sort the need? Go ahead. You can buy again whenever you are financially stable. Number 4, when there's a hike in price. Sounds obvious, but I must mention it. When there is a significant price increase, it is not the time to be patient and keep your stock even longer because you think it will rise even more. No. Remember, you cannot predict what will happen the next minute. Chances are, the market will experience a fall after a massive rise. So if you are asking, when is the best season to sell stock? Here you have it. Avoid every urge to be greedy and sell off when there is a significant increase because you may never be that lucky again. Number 5, when you have your price target. Every good investor that wants to have successful investments sets a price target at the beginning of every investment, and it is best not to be unrealistic with this. Your target may be exceeded in the long run, which is fine, but it is better to set targets that are realistic from the onset. Once your target is met, go ahead and sell. Then move on to the next investment. Do not say your target was met too soon, so you want to wait longer. You may just be shooting yourself in the foot. Let me remind you again that the stock market is full of uncertainties. You can never be too sure. Number 6, when you need to diversify your portfolio. It is never wise to lay all your eggs in one basket, especially for an investment that can go wrong in a blink of an eye. At any point you are ready to diversify your income, it is a great time to sell off your stock and invest in other things. This will help you better manage the risk that comes with the stock market. Number 7, when the company is acquired. Another great signal that it is time to sell is when the company is acquired. it is a perfect time to make a massive profit on your investment, as stock prices usually rise during this time. Number 8. When you made a mistake with the investment. Mistakes are inevitable. It may be encountered irrespective of the type of investment you choose to venture into. Once you've made a mistake with an investment from the onset, it may be difficult to correct and lead to a massive loss. Hence, it is only right you sell off quickly once you realize you made a mistake, to avoid making further mistakes. Finally, knowing when to sell is usually more critical than when to buy. It draws the line to closing a good or bad investment. Be wise not to get it wrong at this stage. Ready to start your investment journey? Explore our channel for more insights on making smart, informed investment choices. Remember, it's never too late or too early to start investing in your future. Join us at Money and Investment for more tips and tricks on building your wealth. Subscribe and turn on notifications so you don't miss out.